Good afternoon. I'm Dr. Fasasi Kazim Adiola. This afternoon, we will continue from our previous video, which the topic is all about double entry bookkeeping. In the previous video, we discussed about double entry. We said double entry bookkeeping is an art of recording financial transaction twice as debit entry and credit entry. We also said that the word debit is a Latin word which means to receive, and the word credit is also a Latin word which means to give. I would say the double entry principle stated that for every debit entry, there must be a corresponding credit entry. What this means is that for every receiver, there must be a giver. The receiver is to be debited and the giver is to be credited. Looking at double entry in details, we said that we'll be making use of ledger to explain double entry. And we say, what is a ledger? A ledger is a principal book of accounts where transactions are recorded permanently. Ledgers are divided into two folds. It has a date, particular folio and amount on debit side, date, particular folio and amount on credit side. From there, we look at basic terms in double entry. What are these basic terms? These are terminologies that is familiar to a beginner in accounting. And we said the basic term means that when we say started, it means your solution, you are going to write capital. If the question say bought goods, in your solution, you write it as purchases account. If the question says sold goods, your solution, you are going to write it as a sales account. And if the solution said check, what you are going to write in the solution is a bank account. And if we say withdraw for personal use, in your solution, you are going to be writing drawings account. All this brief explanation is in the previous video before this video. Today, we are going to look at illustration on double entry. The illustration on the board, which is the following transaction was extracted from the books of Ajasco Venture in January 2021. January 1st, started business by cash. January 2nd, cash paid into bank. January 5, paid rent by cash. January 15, bought goods on credit from Simbi. January 20, sold goods on credit to Jamba. January 28, paid Simbi by check. And January 31st, received cash from Ayo. Sold goods on credit to Ayo, 80,000, and January 31st, received cash from Ayo, 80,000. Now, looking at this question, there are steps in preparing ledger. The first step is that students should identify. This is the first step. Identify two accounts. Second step, post the two accounts to ledger. Third step, balance the ledger. And the last step is extract, try, balance. These are the major steps to prepare ledger and trial balance. Now, the first is identify two accounts, post to ledger, balance the ledger, and extract, try, balance. With this question here, we are going to follow these four steps and we'll see how to post transactions to ledger and how to extract a trial balance, which is the two requirements. The first thing as a student is you put the name. You put the name of the question. The reason is this. In practice, accounts are recorded under letter-headed paper of companies. But in classroom, where we don't have a letter-headed paper, we are using our 40 leaf or 80 leaf, we have to still show that we are still using a letter-headed paper by putting the name of the question, the name of the company. The name of this company is Ajasco Venture. Ajasco Venture. Now, the first thing we are looking at is, let's solve the question. The solution to this question, the first one said, started business by cash, which is January 1st. Started business by cash. The first thing is, if we are solving that, on that January 1st, the one started there, you write it as capital account. And by what? Cash. That is cash account. I've identified the two accounts here. The two accounts here is started, capital account, and cash. After identifying the two accounts, we'll record this account for the business. What are the two accounts? We are going to be recording capital account, and we are going to be also be recording cash account. Now, any item the business receive, you are going to debit. The question is this: started business, meaning capital is introduced into the business. Capital is introduced. Who introduced the capital? That's the owner. If the owner is introducing capital into the business, we'll say the owner is giving out. In that case, the owner will be credited. What does the business receive from the owner? The business receive what? Cash. And by receiving cash, we said anything the business receive should be debited. In that case, if we start business by cash, what the business receive, which is Ajasco Venture, is cash, debit. Where did Ajasco Venture receive this cash from? He received it from the what? Owner. The owner is being represented by what? Capital. The owner will be credited. Now, these two will now be posted in the ledger. We can post anyone first, but we are going to post capital account first. Debit, credit, and two tiny lines, meaning a ledger is divided into two folds. We are now going to put capital account. We said it's going to be credited. On what date? The first thing is date, January 1st. Why recording capital? What does this owner introduce into the business? The particular will now be cash. How much? We'll put Naira sign first and put 50,000 Naira. We have record for capital account, showing that capital is given out. What is representing the capital is the owner. And it shows that this owner is giving out credit, the giver. Now, what does the business receive? The business receive cash. We're also going to open a cash account. Let it be long. It has debit, it has credit, and this is cash account. Cash account will be on debit side, January 1st. Now, while recording cash, your particular tool will be capital. How much? 50,000 Naira. For every debit entry, there must be a corresponding credit entry. For every receiver, there must be a giver. The item that is given out will be credited, while the item that is receiving will be debited. This process is known as double entry, and we have demonstrated the double entry in the ledger. That is, we have recorded January 1st. Let's move to January 2nd. On January 2nd, we said cash paid into bank, 25,000. What does this mean? The two accounts there is bank and what? Cash. Why do we have cash paid into bank? The reason is this. When Ajasco Venture started the business on the 1st, they started the business with cash. Meaning this business has 50,000 Naira cash. But this business wants to operate a bank account. What did they do? They decided to pick 25,000 out of the 50,000, open a business bank account for the business, and deposit 25,000 there. What it means is that the cash will reduce from 50,000 to 25,000. Why there will now be 25,000 in the bank? How do we do that? Cash into what? Bank. Cash is the one given out. Cash will be credited. Who received the money? Bank. Bank will be debited. What do we mean? We are going to open two accounts. This is bank account and this is cash account. Who is giving out? Cash. Who is receiving? Bank. We'll come here. January 2nd. We are recording for bank. The second account is cash. This will be the particular. How much? 25,000. What this means is that bank has received 25,000. And where did they receive? They received it from what? Cash. Meaning bank received 25,000 from cash. Now this is cash. Cash is going out to the bank. When it's going out, you credit. How much? 25,000. Now, this posting is correct, but something is wrong about it. If we look at it, before now, on the first, there's a cash account. In that case, once the account has exists in the same question, you don't need to open another cash account again. Anything that concerns cash goes to the same cash account. Due to this, the cash account has been clean. And there are two accounts. Bank, we have recorded it for receiving debit. We now go to the same cash account and said January 2nd, the particular will be bank 25,000. What does this mean? For every debit entry, there must be a corresponding credit entry. We have to record the transaction twice. Now looking at this, the next one is paid rent by cash. Paid rent by cash. The two accounts there is rent and cash. If we look at it, when we are paying rent, we paid by cash. Cash is going out. The business pay cash out, meaning this time cash will be credited. What did they receive in return? They receive the shop rent. And once they receive shop as a rent, this is what the business receive. In that case, rent will be debited. What this means is this: paid rent by cash. Paid rent by cash. What the business is giving out is cash, credit. What they receive in return is the rent, which represent the shop the rent. That is what? Debit. The next thing is for us to post. The cash is already there, but rent is not in the solution page. What do? We open rent account. Debit, credit, and this is rent account. Debit rent, January 5th. Why you are debiting rent? Your particular year will be cash. How much? That is 15,000. For every debit entry, there must be a corresponding credit entry. Now, cash is going out. For what purpose? For the purpose of what? Rent. How much? 15,000. Now, let's look at it in practice. The business has a cash of 50,000 on the 1st of January. 25,000 go out. They deposit 25,000 to the bank. And at the same time, out of the 25,000 that is left, 15,000 has been used to pay for what? Rent. Debit rent and credit what? Cash. The next account there is bought goods from Simbi. Bought goods. We said anytime you have bought goods, When you have bought goods, in your solution, you write it as purchases. Meaning I'll come here, this one account, purchases account. Who did they buy the goods from? The goods was bought on credit from Simbi. Simbi become a supplier. And as a supplier, Simbi, as a supplier, Simbi is given out. In that case, what did the business receive? That is goods. And if the business receive goods, it has to be debited. January 15, the particular will be Simbi. How much goods did they receive on credit? 30,000. Who did they receive these goods from on credit? They receive it from Simbi. We are going to open Simbi account. And Simbi is the one giving the goods out. Simbi account will be credited. Its particular will be purchases. The particular signifies what Simbi does. And what Simbi does is that he gives goods out for how much? For 30,000 naira. Now, the two account has been recorded. Bought goods, purchases. The Ajasco venture has received goods, debit. Who give the goods out? Simbi, who is the supplier. Simbi account has been credited. Now, the next one is sold goods on credit to Ayo. Sold goods on credit. We have said anytime you see the word sold goods, don't write sold goods in your solution. What you are to write is sales account. Who did they sell the goods to? They sold the goods to Ayo. Ayo happens now to be Ajasco's customer. Ayo is the one that received the goods on credit. Ayo account will be debited. Why sales account will be credited? We stand for goods that is going out. In that case, we open sales account. The sales account represents the goods that the business is giving out. And we say once you are giving out, your account should be credited. Now, on January 20, goods is going out. To who? To Ayo. That is 80,000 naira. For every credit entry, there must be a corresponding debit entry. Now, who are we going to debit? The person that received the goods, which is Ayo, and we'll call this Ayo account. Now, debit Ayo for receiving goods on credit. Our particular will be 80,000 naira. For every debit entry to Ayo, there must be a corresponding credit entry. Transactions are to be recorded twice. Now, paid CB by check. Paid Simbi. Simbi, and anytime you see the word check, they are referring to bank. Meaning paid Simbi through the bank account of Ajasco Venture. Paid Simbi. Who did they pay to? Simbi. Simbi account will be debited. And the check that is given out will be credited. Are we going to open ledger? No. Reason being that there is Simbi ledger on the board and there is bank on the board. What do? We debit Simbi on January 28th, and his particular will be bank because Simbi received this money through bank of what? Ajasco Venture. Debit Simbi with how much? 20,000. For every debit entry, you go to the bank account on January 28th, the same bank you have opened before, and credit, meaning money is going out through the bank of Ajasco what? Venture. How much is going out? 20,000. How much did they have in the bank before? 25. Out of 25, they have paid Simbi 20,000. Meaning what is left in the bank account of Ajasco Venture is 5,000 naira. Now, how much goods did they buy from Ajasco on the 15th? They bought goods of 30,000 naira from they bought goods of 30,000 from Simbi on the 15th. And how much have they paid Simbi out of it? 20,000. Meaning Ajasco Venture is still owing Simbi 10,000 naira. Now, lastly, we have January 31st. We have received cash from Ayo. Received cash from Ayo. Why did they receive cash from Ayo? Because they once sold on the 20th, they once sold goods on credit to Ayo. Now they have received their money from Ayo. In that case, the cash the business received is debit, and Ayo is given out. Ayo will be credit. Do we have Ayo there? Yes. We now say January 31st, credit Ayo, because Ayo is giving out money now. His particular will be cash. How much? 80,000 naira. We go to cash account on 31st and put Ayo, meaning we receive cash. Ajasco Venture receive cash from who? Ayo. How much? 80,000 naira. We have come to end of posting. What does this mean? It means that the first thing we do is to identify two accounts. The next thing is, out of the two accounts, which one are we receiving and which one are we giving out? The item that we are receiving with debit and the item that we are giving out with credit. From the beginning, we say started business by cash. We credit capital. Capital stand for started, and we debit cash. On the second, cash paid into bank. We credit cash account and we debit bank account. On the 5th, paid rent by cash. We debit rent account and credit cash account. On the 15th, bought goods on credit. Bought goods means purchase. We debit purchase and we credit Simbi. On the 20th, sold goods on credit. We credit sales for goods going out and we debit Ayo. On the 28th, paid Simbi by check. We debit Simbi and we credit bank account. And on the 31st, receive cash from Ayo. We debit cash account and we credit Ayo's account. Now, we have posted all the transactions to Ledger. The next is, how do we balance this account? How do we balance the account? We have to clean the question to explain some things. To balance account is very easy, but we need to know this before account have been balanced. One, we need to know what we call balance brought down, or we write it as balance BD. What is balance BD? Balance BD, this is the balance at the beginning of accounting period. That's balance BD. We also have what we call balance carry down, or we write it as balance CD. What does this mean? This is the balance. This is the balance at the end of accounting period. Now, to a layman, what does this mean? When we say balance carried down, we mean balance at the end. And when we say balance brought down, we mean balance at the beginning. Now, if you have 100,000 on Monday, for example, and every Friday you normally close your account. And on Friday, you have spent 90,000 out of 100,000. It means it remains 10,000 at the end of Friday. At the end of Friday, the 10,000 remaining is what accountant known as balance carried down. Another account will start on Monday, which is another accounting period. That 10,000 will be serving as balance what? Brought down. For example, if you have 120,000 and you spend 100,000, the 20,000 remaining in your hand will be referred to as balance carried down at the end of that day. The following day, the 20,000 will be serving as balance brought down. We'll be applying this balance carried down and balance brought down to balance this ledger on the board. For example, how do we do that? How we do that is this. We first write balance carried down first before balance brought down. And the balance carried down will always be at the side. The balance carried down always be at the side that is lower. Now, between these two sides, which side is lower is here. And the balance carried down normally be at the end of the accounting period, which is January 31st. We now say, we can write it this way, balance carried down. How much is here? 50, we brought it here. That is, we have closed the account. By closing this account, we end the account for the month. By drawing two lines, means that for the month of January, account is officially what? Closed. What do? We now say another account will start the following day, which is February what? 1st. The following day is balance brought down, and that is a 50,000 naira. Let's look at cash account, which is different from capital account. We'll add the two sides. How do we do that? We'll add the debit, which is 120,000, which is if we add it together, this will give us 130,000, if I'm correct. And we'll add the credit side too, which is 40,000. Now, what we'll do is this: between the debit side and the credit side, which side is lower? The credit side is lower. Once the credit side is lower, it means firstly, your balance carried down will fall on the credit side. Now, what do you put on the credit side? What you are going to put there is the difference. What's the difference? You now say the debit side total, 130,000, minus the credit side total, 40,000, and that will be giving us 90,000. 40,000 minus 130, that's 90. Meaning, what this means is this: in the month of January, they are able to get a total cash of 130,000, and they are able to spend 40,000 out of it. Meaning, they are left with 90,000 naira cash in the month of January. This will be used to continue the business in the month of what? February. But before you do that, you close the account. Now, how do we close this account in this situation? We are going to add this column together. 50 plus 80, that's 130. We're also going to add this, everything here together plus the balance carried down. 25 plus 15, that's 40, plus 90, that is 130. You now observe that when you are closing the account, the two sides must be the same amount. Now, balance carried down is on what side? Credit side. You come here on February 1st, you put balance brought down. The carried down is 90,000. The brought down will also be what? 90,000. On the, for bank account, the lower side is the credit side. In that case, put balance carried down on the lower side. 25,000 on debit, 20,000 on what? Credit. You say 25,000 minus 20,000, you have 5,000. You close the account. This is 25,000. When you add this together too, it's 25,000. Carry down is on credit side. You come here on February 1st. You put balance what? Brought down, 5,000. Make sure that the same amount of carry down is the same amount of what? Brought down. And the carry down and brought down cannot be on the same side. The carry down comes first before the brought down. Now let's come here to January 31st. We'll say balance carry down. That is 15,000. Account close. We'll come here and February 1st, we have a balance brought down. That is 15,000. Now let's go to purchases. We'll come here and say January 31st, balance carried down 30,000. That's the total goods they bought in January 31st. And February 1st, we say balance brought down. That is 30,000. Now, why are we doing balance brought down? We are using a concept called going concern concept. The business continues. Now, simply, the debit side is 20,000. The credit side is 30,000. The lower side is on debit side. Please put the carry down on the side that has the lowest amount. Balance carry down. We'll now say 30 minus 20. That's 10. We're almost rounding up. This 30. This 30. Now, carry down is on debit side this time. Here you have a balance brought down. How much is carried down? 10,000. The brought down to will be what? 10,000. Now, coming to sales, this is the lower side. Balance carried down 80,000. Meaning for the month of January, the total goods sold was 80,000. And on February 1st, I will have balance what? Brought down. How much? 80,000 naira. Now, having done this, let's go to the last. Ayo, debit side is 80,000. Credit side is 80,000. No side is higher than each other. In that case, we say the account as what? Balance. Now, we have finished solution 1. We said post the transaction to ledger. Now, solution 2 said we should extract a trial balance. We should extract a trial balance. And what is trial balance? Trial balance is a list of testing the arithmetical accuracy of debit and credit balances extracted from this ledger. Is a list of testing the accuracy of debit and credit balance here extracted from the ledger. The trial balance will summarize everything about the ledger and will also help us to know whether all the items we have posted in the ledger are accurate. If the trial balance side refuses to balance, it means something is wrong with our posting. Let's see, how does trial balance look like? This is a trial balance. Trial balance has debit and credit. We'll call it trial balance. When are we extracting it? As at 31st January 2021. It has debit, it has credit, and here is just particular. This is the format of a trial balance, and this is our solution what? 2. It's very easy. It's very easy, and it doesn't take time. How do we extract trial balance? We put naira. Now, how do we extract a trial balance? The first thing is we pick the ledger one after the other. Trial balance is not an account. Trial balance is just an extract. Now, this is capital account. We'll pick the first one, but we'll not write capital account. We'll just write capital. Now, to extract this trial balance, you will look at your balance carried down. Look at what I cycle here. The balance carried down, you look at your balance brought down. Your balance brought down here fall on what side? It fall on credit side. Look at my hand. It means this figure, 50,000, will be on credit side. That's all. That's all. When you look at your balance BD, you put the figure on that side. Yeah. Let's look at cash. The next one is cash account. We write cash. After we write cash, you see that it has debit and it has credit. For us not to be confused, we come here. Where's the balance BD? The balance BD fall on debit side. It means it will be on debit side. We have extracted. The next one is bank. We write bank account. Where's the balance BD of bank? It's on debit side. It shows we are going to put the 5,000 on debit side. What next? Rent. Rent is on debit side. It shows we extract it on debit side. What next? Purchases. Purchases to find the BD. Find itself on debit side. And how much is that? Simbi. Simbi. Being a name of a person. Who is Simbi? Simbi find itself on what? Credit side. Simbi is known as a creditor, or we call it account payable. Simbi is a creditor, but in line with IFRS, we call it account payable. What it means is that Ajasco Venture is still owing Simbi 10,000 naira. Why? They bought goods on credit from Simbi 30,000. They paid Simbi 20,000, and they are still owing 10,000. It will be shown in their trial balance on credit side that Ajasco Venture is still owing Simbi 10,000. The BD is on credit side. Let's look at sales. Sales balance BD fall on credit side. It means it should be extracted on the credit side. And let's look at IO. In the case of IO, the debit side is 80, the credit side is 80. When you find a ledger that does not have balance carried down or balance brought down, why? Because the two sides are equal. What makes the two sides equal? They sold goods to Ayo on credit 80, and Ayo has paid them 80,000, meaning Ayo is neither a debtor or a creditor of Ajasco. Ayo is no longer owing Ajasco, and where a customer is not owing, his name can no longer reflected in the trial balance. Now, for the two sides of the trial balance to be equal, this type of ledger will not be extracted into the trial balance. We have come to the end of the trial balance. The next thing we need to look is, does the trial balance equal? This is 50 plus 10, that's 60. 60 plus 80, that is 140 on credit side. Let's look at debit side. 90 plus 5,000, that's 95,000. 95,000 plus 15, that is 110,000. 110,000 plus 30, that is 140,000. The trial balance has shown us that all our posting to ledger are correct, and we have come to the end of this question. Thanks for watching our video, and we thanks all our viewers. And to those of us that has not subscribed to this video, we enjoy you to subscribe to our YouTube channel, FA Kazim 101, and we pray that as you are learning, may Almighty God give you retentive memory. Thank you.